Okay, folks, welcome to a brief overview of my technical analysis of Bitcoin. It's been a few days since I've gone over Bitcoin. A lot has happened over those several days, and I'd like to address a couple of questions. One, would I do another video? Yes, I'm doing it now. Two, do I discuss Bitcoin with members? Yes, I do, especially with our gold members who asked me to review the charts. And it's not just Bitcoin, it's all cryptocurrencies, Ethereum, Ripple, etc. Three, what is my fundamental knowledge with regard to cryptocurrencies? Nada, very little. And the fourth, and I think most intelligent question that I've been asked, and it's usually of my members, because they are an intelligent lot, is there a situation where I would consider buying not just Bitcoin, but a cryptocurrency? Is there a situation? Probably at this point in time, probably not. That doesn't mean I won't analyze it for my members and discuss it with them. I do get the logic of most millennials that it is an alternative to the US dollar. I am heavily positioned against the US dollar. You may be saying, how so, if you're not long of the cryptocurrencies? And I'm long of alternatives to the US dollar vis-a-vis gold and silver. So I get the logic of as to why people want to be long of the cryptocurrencies. And I don't necessarily believe in the short term anyway, and I could be wrong about this. I don't know much about them, so I don't want to be arrogant and pretend that I do. But I don't necessarily think that at any point in time that these cryptocurrencies are going to transplant the dollar without the stamp and approval of the banking industry as well as the US government. It's just simply not going to happen. The dollar is the world's reserve currency. There is no way we are giving up having that edge over the rest of the world without a massive fight. So do I still think that there's room for Bitcoin and the other cryptocurrencies to move higher? Absolutely. To discuss that, we need to take a look at the US dollar. Let's go to it. And we'll come back to Bitcoin. So for those of you who do not think that the US dollar is sound, that the US economy is on quicksand, you're on solid ground. You have the chart of the US dollar. This is not my opinion. I'm looking at the chart of the US dollar. All we're told day after day is there's no inflation and that the economy is strong. Then why then is the US dollar tanking? We are putting in lower highs and lower lows. Why is that happening? It's because this economy is on quicksand. And if we break down below 90.99 on the US dollar, which was the low seen in September of 2017, we're going a lot lower. And in all probability, we will retest the highs of June 2010. What does that mean if we're breaking down and filling this air pocket from June of 2010? It means that anything denominated in US dollars is going lower and inflation rising despite what the US government has to say. Now, gold and silver are already beginning to move higher as the US dollar moves lower. When you take a look at the VIX, and this is how I'm tying in traditional technical analysis in with the cryptocurrencies. Now, for you folks that are not familiar with what the VIX is a measure of fear. Since we are using a monthly chart of the US dollar, let's stick with a monthly chart of the VIX to remain consistent. Now, the VIX on this monthly chart is at near historic lows. In fact, on a closing basis, meaning where we close out the month or the day or the week, whatever chart time frame you're using, daily chart, weekly chart, monthly chart, we are at historic lows. What does this mean for you folks that are not familiar with technical analysis? The VIX is a measure of fear. The lower it goes, the less fear there is in the marketplace. And being a contrarian, we always want to pay attention to sentiment. And when you have very little fear in the marketplace, that's when I become very, very worried about a quick sell-off in this market. And trust me, I won't go into it right now, but I will go into it with members. We are very overbought in the stock market. Now, if confidence is impacted here in the United States and the dollar does break down and fear rips higher, what will do well? What will do well if it's a non-geopolitical event, meaning North Korea does not launch another ICBM, Russia doesn't invade Ukraine or Georgia, something like that. If it's an isolated U.S. event, you'll see a sell-off in the U.S. dollar. It'll grow weaker. And you'll see money move from the U.S. dollar and into gold, silver, and in fact, probably cryptocurrencies, because they are viewed as a store of value. And this chart here of Bitcoin measures the value of Bitcoin versus the US dollar. Now I'm getting ready to set up a trade of either Bitcoin or one of the other cryptocurrencies. Now we'll talk for these purposes about Bitcoin and what I'm looking at right now. I'm looking at, and I've been talking about this for several weeks now, Bitcoin holding support. This is very close to a buy for me. And that doesn't mean if I want to go buying ultimately $10,000 worth of Bitcoin that I'm going to buy $10,000 worth of Bitcoin today. No, I'll put on a trade of 1,000, 1,500 tops of Bitcoin with a mental stop loss right below the lows of 12/30/17, December 30th, 2017. If it breaks down below that level, in all probability, we're going to take out the lows last seen on December the 22nd. If it breaks that level, we're going a heck of a lot lower. So I don't want to be overly leveraged to Bitcoin. Now, let's take a look at a monthly chart. We spoke about the dollar on a monthly basis, the VIX on a monthly basis. Folks, on a monthly basis, Bitcoin looks like an absolute mess. We have a bearish key reversal on the month, but we are rallying off of key support. So what's a guy to do? What's going to happen here if you want to get long of Bitcoin? Well, again, I've already laid out a strategy of if you have a $10,000 allotment of cash you want to dedicate towards Bitcoin or whatever you want to trade in the cryptocurrency arena. I'm going to talk specifically now about Bitcoin. You want to put on your small trade. I call it scratching the itch, all right? Get it out of the way. You're dying to buy it. You're chomping at the bit. Get it out of the way so that you could think rationally and clearly. And keep that buy small so that if it breaks down, you're not kicking yourself for being so greedy. You'll be patting yourself on the back because you kept it small, you used a strategy, and you executed on your stop loss, and you lived to play another day. Now, what I think may happen here is if we close out the month, and it's still early here, let's face it, if we close out the month above this gold line here, which is critical support, the market is telling you that. If we trade sideways for another month and fail to put in a new monthly low, in all probability, we will continue higher on Bitcoin, because what the chart of Bitcoin is telling you is that it wants to consolidate. It was overbought, now it's taking a rest. Now on RSI, we're still very overbought. We're at current at 93.28 on RSI. That's still very overbought. So whatever you do right now, keep your buy small. Weekly chart. On a weekly chart, let's throw a new line up here. All right, so on a weekly basis, what I just did, I didn't draw a new line. I extended the prior line down, and this represents the upper band of resistance. So we may trade for the next couple of weeks within this pennant formation, with the gold line being the floor and this green line here, the diagonal line, being the upper band of resistance. Once you break out, when you see a breakout above that upper band of resistance, it's game on for Bitcoin to the upside. Now, again, we always want to talk about our downside risk. That's our risk management process. You have to do it. There's no alternative if you want to stay liquid. And if we get a breakdown below this orange line, and more importantly, this line here at 12,542 on Bitcoin, you need to be out of that position because that is a continuation breakdown. Now, RSI weekly basis, we continue to put in lower highs and lower lows. The same deal here with our stochastics. So while we don't want to necessarily trade off of our indicators, because they're just that, they're indicators, what we want to rely upon the most is price and volume action, daily chart. Now on a daily chart, we could be setting up here a W formation. We've already formed the left side of the W. Here's the pivot point here at 17,275. We're pulling back, we're holding support, forming the right side of the W. So we're looking at 12,275 as being our pivot point. We get a break above that level, we would look to add to our position. Now, what we're also watching here is the 4-hour chart. This is my early indicator of where a stock might go on a daily basis. The 2-hour chart is still a little bit too volatile, and certainly I don't want to use time frames, 15-minute, 30-minute. That's ridiculous. I'll leave that for the day traders. We remain in a tight consolidation here, and we continue to kiss this support level. Now, again, if it breaks and goes lower, we avoid like the plague. If we begin to break out on a 4-hour basis, let's throw a line up here, this line right here. If we begin to break out above it, that's our early warning indicator that the price of Bitcoin may head higher. We're not seeing an indicator yet, but members will talk about this on the week ahead commentary over the weekend. So that is my analysis of Bitcoin for this current trading week. Everybody have a really profitable day and a great weekend, and I will talk to you soon. Be well.